Minutes from kicking off. We'll be beginning in just a minute, so get comfortable. Grab a beverage, someone you love, invite them to sit down and have all these great questions and aspects of culture and finances engaged specifically to your leisure. Now, Sanjit, David, I'm seeing you on here twice. I don't know if that's because you have twice as many questions as everyone else does, or that's a pretty serious commitment to the broadcast. All right, a couple minutes from kicking off. Transferring devices. That makes sense, Sandra. Glad to see that. Glad to hear it. All right, about one more minute before we jump in.
Maybe you should sing, Matt, while we're waiting.
Those are always good options. My family has asked me to not sing. I still do it every once in a while from the pulpit, and it doesn't make me stop. And one thing that they've asked me to do is to stop doing accents, and they can't make me stop doing that either. I do neither one of those well, by the way. I think we all acknowledge that. But you know, sometimes you just got to do what you got to do. And but no, Greg, I will not hinder this broadcast, especially since it already has begun the recording process. That's the kind of footage that I could never recover from. I'm pretty certain. So Anderson's, glad to see you guys. We got Flows, Streets, Mr. Collins, Brick. It's great. All right, looks like we're having some trouble with the polling. You know, in an election year, it seems like that's appropriate, right? Some kind of polling problems. Even with technology, can't quite make it happen. So, all right, well, it's 8:01, so we want to go ahead and honor the time and make the most of this opportunity. So I wanted to go ahead and welcome everybody. Glad you've chosen to jump on this webinar. This is technically our first ever Roswell Community Church webinar, and one of the things we're hoping to do both tonight and just in general with these evenings is to try and engage very particular, very specific that are on y'all's hearts, on your mind, or that you might be in need of some help or assistance in. And we thought there's no better place to start than to begin talking through some of the financial implications, realities that are kind of swirling about. And so really excited tonight to have an opportunity to have these three gentlemen on the call on this webinar together. Again, just for clarity's sake, if you have questions, go to the bottom of your screen. We'd love you to start populating what particular questions you might have relating to anything from investment to cash flow to debt to how to make ends meet to anything that's particularly interesting to you, and then these guys will be able to address it and engage it effectively. So again, start filling out those questions as we go along here. I have a couple opening questions that I'll invite these guys to kind of weigh in on in particular. And so without further ado, I'm Matt Miller, and I'm excited to be able to be the host MC. I have a very scant knowledge of financial dynamics. This is why I love having people around me like these three gentlemen to help me. So to that end, I'm going to let them take just a minute to introduce themselves in case you're not super familiar with who they are, and then we'll jump into a kind of an initial question and move into the conversation. So I'm just going to begin with Greg. Why don't you introduce yourself and tell us a little bit about your financial background, and we'll jump in.
Hi, well, I'm now a reformed attorney. I started as an attorney with the SEC and then corporate. I couldn't live the life of an oxymoron, a Christian attorney, so became a financial advisor. Took a couple years off to raise money for Walk Through the Bible, became a financial advisor after that again, and currently serve as an insurance specialist for other financial advisors. So most of my wheelhouse is going to be in the insurance area. My wife, Mary, and I live in Woodstock, 3 kids, all 3 kids married, Brian, Seth, Megan, and 4 grandsons. And we've been part of RCC since we were meeting in the Chuck Harley's living room.
Been a minute. Well, thanks, Greg. All right, Jeff, tell us a little bit about yourself and background.
Sure. I'm Jeff Buck. My wife is Jennifer. We have 2 high school boys, Bradley and Scott. I've been in the investment industry. This is my 30th year. I have a degree in economics from Syracuse University. I'm a chartered financial analyst. I'm currently a partner at Diversified Trust Company, where we manage assets for high net worth individuals, primarily some endowments and foundations as well. We manage about $7 billion in assets. My focus is on the alternatives portion of those assets, so hedge funds. Prior to this, I've been at Diversified for 9 years. Prior to this, I was the chief investment officer at a firm called Harmach & Berg, which is kind of the big homegrown RIA in Atlanta, and I managed the hedge fund of funds platform for Wilmington Trust, which is a $40 billion trust company at the time.
Gotcha. So you dabbled, it sounds like. That's what it sounds like to someone like me. I like it.
Been around a little bit.
Yeah, and your wife has been was it a personalized chef, a personal chef at some point?
Yes.
That's just one of those things like not a lot of people have living in their house. As a personal chef, that's a good call. This is a full orb picture for you.
It's good living.
It is. It sounds like it. So, all right, Morgan, tell us a little bit about yourself.
Sure, Morgan Chalk. Been at the church for 6 or 7 years. Married to Libby. We have 4 kids, 3 boys and a baby girl. So working from home is exciting. Been working at Ronald Blue Trust doing financial planning for 14 years, helping individuals make wise financial decisions.
Looks like Morgan may have frozen up. Such wise, Morgan, you froze up for a second there as you were telling us about the wise financial decisions you're helping people make.
Am I back?
Yeah, you're back. Yeah, I just wanted, I didn't know if you choked up a little bit. It was so moving to you.
No, it was very moving. I had a moment. No, that's it.
Okay. Well, that's awesome. We're really glad to have each of you guys here. I'm going to go ahead and jump in. One of the things that, I'm particularly curious about is what's some of the consistent themes or issues, like the kind of fears that you're hearing or seeing the most from your clients, from what you're hearing maybe from family members or individuals, and then like what kind of perspective are you giving them in the midst of all this? So what's like in the air in your world, and whether it's from family or from clients. Morgan, you want to kick us off?
Sure. Yeah. The kind of the biggest question I've been getting from clients, we do manage investments for people. So the question I get often in times like this is this time different? Is this a fundamental shift to the way the world works, the way the economy works? Ergo, what should I do in this situation? Should I get out of what I'm invested in? Because I see it going down, and that's a painful process for people. That's real money that they've worked hard to save and invest. So that's kind of the number one theme that I'm getting. So spending a lot of time just talking through all the times in history. It's easy to forget, all the things we've been through as a nation, as a world. So talking through even, we went through the financial crisis 12 years ago, went through 9/11 in 2001, went through the dot-com, had some bad economic crash of 1987 where the market dropped over 20% in one day. We've had world wars. There's been a lot that we have overcome and gotten beyond. So people that are patient investors and willing to let it ride come out fine on the other side. It's easy to be a long-term investor, but the hard part is the long-term is made up of a lot of short terms, and some of those short terms are painful like this time.
So the down doesn't mean it's over or this is the permanent trajectory and like that. That's some of is that the natural fear that you hear from people? Is like, will we?
It is, yeah. and we all have, we all have a recency bias. We take whatever's happened recently and assume that is going to continue to happen, whether that's good or bad. So the natural way our minds work is, well, we've been headed this way. Is it just going to keep on the same trajectory downward? And historically, that's just not what happens over time. Maybe for a few years, the Great Depression recovered in, I think, 12 or 13 years as a whole. So that was a long one. Yeah. But even that, we got through it.
Yeah. Okay. So summarize that in like what's the one perspective you tell people then, as they're asking all these questions, what's the one line that you're kind of trying to like, hey, what is it? What would you say?
Yeah, I think trying to just reframe it as, hey, if you're invested in stocks, that should be long-term money anyway. So when I talk with a client, if I talk with a client, I talked with a client today that's 40 years old, and we're talking about his retirement money. And I said, at best, if you do really well and you decide to stop working at age 60, if this thing recovers within 20 years, you're better off staying in it. Because the hard part, if someone gets, I'm going more than one sentence here. I'm sorry. I'm off to a bad start. But the hard part, if you get out, the other decision you have to make is, when do you get back in? And most people get out when the news is really bad, and they want to get in when the news is good. The problem with that strategy is the stock market is going to recover ahead of good news.
Gotcha. All right. So if long-term, stay in. Makes sense. All right. Jeff, what about you? What are you hearing with some of the kind of the noise, perspective, fears, elements that you're having to speak into right now?
Yeah. Morgan made really important and good points. And I want to emphasize two things before I forget. The kind of those last two things about if you get out, you have to decide when to get back in, and that is as difficult. It's so just leaving that there, and just being long-term oriented. The fear is that strikes people is, I don't want to lose more than I have. As Morgan observed, your equity, your stock market money should be long-term money. And so you need to be willing to ride that out. Ideally, you're going to rebalance your portfolio back into stocks at some point. Another difficult decision. But, there's the fear of losing more. Mm-hmm. And there's the fear of missing out on an opportunity. And, they're two sides of the same coin.
Yeah. Before we got on, you were saying, you made that was a great analogy. You said there's people say that that the market is run by what and what?
Yeah. So typically you hear, they're saying the market's driven by fear and greed, and it's really fear and fear. It's the fear of losing money, and it's the fear of missing out on an opportunity, and not capitalizing on something.
Fear rules the day, huh?
It does.
As if it does not in other environments too. That makes sense.
Yeah. And I'll tell you, it's interesting, the fear of missing out on an opportunity, one of the observations that's really just sinking in with me recently is that the clients who do try to capitalize on market movements like that tend to move early, and that gets painful. It's an impossible thing to try to get right, but at the same time, if you are in a position where you have an allocation that is appropriate, and when I say appropriate, therefore in times like this, you are looking to, I'm okay, and stock prices have fallen, maybe I should buy more. That's a great reaction, and people shouldn't dwell on trying to get it precisely right. Moving incrementally is a really good way to go about it. You're never going to get it just right. Mm-hmm. But making shifts, if you can, opportunistically. So again, stepping back to what the original, sort of question was, it's really those two sides of fear that I'm hearing. And the solution is to have a process and to be long-term oriented and to understand what your goals are. What are you trying to do here? You know, for the 40-year-old who's saving for retirement, this is not going to look like nearly as big a deal when that person is retiring. And there's always the, you know, gosh, this is so scary. We've never seen this before, because every time we've never seen one like this before. But every time it ends up working out given enough time.
Yeah, yeah. So you spoke to the 40-year-old. I just kind of going to interject right now. We got some folks on the call that are more on the more closing end of the, you know, they're either trying to draw from investments at this point, or they're in the retirement season. Like how I mean, I get the 40-year-old or the 25-year-old, right? My son, I'm like, dude, don't worry about it. You got a long way to go. But how is that different for folks right now that are in, you know, that are either starting to draw from their retirement, et cetera? What is some of your perspective on that? And all you guys can speak into that.
So we generally look at how much money are you going to need from your portfolio over the next 10 years. And then any of that money is going to be parked in more stable investments like bonds or cash. So historically, I think there have been 2 times where over the course of a rolling 10-year period, so at any point, if you stopped and looked at a return over the last 10 years, I think there have been twice where it's been negative. One of those was the Great Depression. The other was recently here with the dot-com bubble / 9/11 and the financial crisis. So give stocks at least 10 years, there's a high probability that they will treat you well. So by having 10 years in more stable investments, you can ride it out. And that's another conversation I'm having people is, hey, we've planned for this. We know this is what the stock market does. We never know when, we never know how long, how deep it's going to go. But if you have that kind of safer money that you can live off of, so you aren't forced to sell when things are low, you don't want to sell your stocks when they're low. So that's a good, to Jeff's point, that's kind of the process that we use to, then that kind of dictates how should the money be invested.
Yeah. Cool.
Matt, I would throw in too, similar to what Morgan is talking about, that unfortunately this is something you can't do immediately, but we have a number of clients who have set up assets outside of their portfolio. Forgive me for saying where it is, it's in insurance. But in down market years, if you pull out from the insurance, leave the portfolio alone, you'll find a tremendous advantage to those clients who have set up outside assets. It doesn't have to be insurance. It could be a reverse mortgage line of credit. There are other assets that work in the same way. Unfortunately, those strategies take a long time. But maybe if younger people in the church see older people caught in what could be what we call sequence of returns risk, they're trying to retire in a down year. They might take some steps now to create those other assets that complement the portfolio. The portfolio, the IRA, they're the main thing. Always do that, but have something else as well.
Yeah. So, Greg, what about you? What are you hearing? Like, what's some of the fears, concerns? One of the things you're kind of having to address a little bit in kind of in your world.
I think our biggest issue with clients has been their inability to make decisions right now. They're frozen in place. It's back to fear. And so they're so fearful of what's going on in the country that they have to maintain huge piles of cash in some cases. They're afraid to make planning decisions that would make a huge difference for the good for their families. And we're just trying to move them off it. And if you want to talk about a response to me that I would like the ability to say to my clients more than I have even is, we have a huge opportunity right now. And I don't think it's always necessarily going to be low stocks like the market timing that Morgan and Jeff are warning people away from. I think the opportunity is in giving. Right now, the impact of giving some money to missionaries who there are in these countries, which are in far worse shape than we are, can have a tremendous impact. And maybe just getting rid of the fear and releasing some of those funds, that would be a great way to address what's going on right now.
Cool. Well, one of the things, and Morgan, you kind of addressed this a little bit. Is there the difference between, there's been, it's not like this is the first time there's been a financial impact or the potential of recession or an actual recession, right? As you mentioned, Great Depression, 1987, 25% drop in one day, right? I think there's some measures to keep that from happening again, right? But the, of course, the dot-com 9/11 piece, and then the most recent 2008 crisis. How is this different? Like, can you guys just help us? How is this different than those pieces? And if so, what do we learn from those that may either apply or may not apply in this kind of context? Like, what are people not thinking about in this context? Maybe is a way of asking that.
Is this for Morgan?
No, I'm sorry. Did I say Morgan? No, I was just quoting Morgan. Any of y'all. These are always for any of y'all.
Well, they're all always different, but the answer to them, I think, very much remains the same. I think one of the things that's insidious about this one is there was no warning on the macroeconomic front. So the economy was actually reaccelerating from the softness of last summer, the middle of last year. The GDP now number from the Atlanta Fed it was like late February, was for first quarter GDP growth to be 3.1%, which is a pretty strong number, and reaccelerating.
We're coming out of a really strong economy, and it's not because of economic factors, is what you're saying.
Yeah. So my point is, things were strong, and it was likely that people who have portfolios that are flexible were probably pretty bullishly positioned. So this one smacks a little bit harder than something where, you start seeing, well, the economy is getting soft and indicators weakening. But, ultimately it still is the same answer, which is you need to be able to give it time. You need to have the cushion of safe assets that Gregg and Morgan have talked about to get you through these tough periods. I mentioned, I think on our prep for this, that the highest expected return is from stocks, and so there's a reason we don't all just own stocks, and it's because stocks are prone to these sorts of periods, and this is why we have those other assets, is so that they're there to cushion the fall and get us through to the other side once there is some sort of recovery. The other last thing, and then I'll let someone else talk, is we have been given really powerful minds, and there's a lot of the human mind is great at problem solving and adapting, and the whole world is trying to figure this out and solve it. And so my point is not to give, obviously nobody's thinking I know anything about medicine, but it is possible that there is something figured out somewhere across the globe that greatly reduces the mortality rate of this, and that would change all of this on a dime.
Right.
And so that to me is something that's really different, because it's almost a risk to the upside, right? If you sell here and something like that happens next week, as Morgan said, you have to be in the market before something good happens in order to try to capitalize on it.
Right. Rest of you guys, any thoughts? There's a question that came in, just Jeff, that kind of alludes a little bit. He was, Greg asked, what are the hedge fund models projecting for the time for the economy to recover once it gets beyond the immediate threat of the COVID-19? Or most people talking months? Are they talking years? What's kind of what's in the air right now? Again, I know unprecedented times. We've never done this before. I think you guys are all acknowledging no one knows exactly. So, but what's in the air that you're kind of hearing or sensing or seeing?
Yeah, there's a ton of guesswork, and it really is going to hinge on how this struggle against this virus goes. So it's almost like wartime, right? Where it's the market will swing on how the battles are going. Hedge funds don't have any better read on this than anyone else. But
because there's money there, right? Surely they do.
Well, they're more about security specific investments and less about the sort of the big macro stuff. But there's a broad range. What I'm hearing is there's a broad range of perceptions, and it really hinges on how quickly this thing gets resolved. And so to me, there isn't much worth in it. I mean, it could be something, that we're through by the end of the year. I think Goldman Sachs is saying they expect, I think, third quarter GDP to be, really strong, and that would be great. I hope it's true. And so, they're like first quarter, second quarter will be bad. Third quarter will be strong, but it is pure guesswork. I wouldn't put too much weight in any of that. And the bigger question, I think, is what sort of like permanent damage comes from this? What happens in retail or in restaurants that just simply doesn't recover? Yeah. Some businesses that were already tenuous, it's probably just accelerating what might have happened anyway, but because there's a huge shift going on in retail. Anyway,
okay,
I have no good answers there.
That's good. I mean, that's a helpful thing, though, because I think everyone's going like, if there's an answer, like, so does someone have the answer? I think that's in the air, right? And I think for you guys to be insiders going like, I mean, am I hearing that, Morgan? Would you guys both agree on that? You and Greg? You can't.
Yeah, absolutely. And I always think it's interesting to think back to all the big investment houses make a prediction of what they expect growth to be in the next year, and no one knew there was going to be a virus. So we're living in uncertainty. But to Jeff's point, that's another thing I've been saying is we have some of those brilliant minds, and God created us as creators and with the capacity to think, as Jeff was saying. There's so much money and so many hardworking scientists, medical people that are working on a solution, because this truly affects the whole world.
Right.
So I've seen similar kind of third quarter is when a lot of people that are making projections are expecting this to shift, but you never know. We often talk about Ecclesiastes 11, which says, divide your portion to 7 or 8, for you do not know what misfortune may come upon the earth. And we are definitely living that out right now.
Man, talk about some verses from Ecclesiastes that most people don't usually find themselves meditating on a whole lot until moments like this. Well, I have a question in light of this. One of the questions was just around investing. Like, do you think this is a good time to buy? I mean, like, is this a time I'm assuming you're saying continue. If you have a normal distribution in on a monthly basis, whatever for your IRA or your Roth IRA or whatever your retirement methodology is, your words would be to continue, to pause, is this a good time to be buying? If you got a I don't know, bonus or something like that right before this, and you were thinking about, is this a time to buy? And what would you guys be? What was that perspective right now in light of where things are at? So what are your thoughts?
I'll just.
You say don't sell, right? You said don't sell. I thought I heard you say that. Is that correct? Don't sell. Like, don't sell out your IRA stuff, right?
I was just going to say from again, for understanding, I'm not the wealth manager in the group. On the insurance side, though, where we're dealing with index accounts, we are urging them to continue to put as much as they can into the index. If you have a 0 floor or 1% floor, you've got nothing to lose. It's a great time to be buying, it seems to me.
Yeah, it depends on your goal. And that's really what should be driving this, not so much where the markets are today. If you are dollar cost averaging into the market as part of your saving for retirement.
Can you say that? What does that mean? Dollar cost?
Dollar cost averaging. That just means regularly investing. Sorry. Gotcha. Yeah. If you're on a sort of your own program for regularly investing, whether it's in your 401k or just your regular take-home assets. There's no reason to change any of that. You should be pleased that you're buying assets cheaper here than you were, last month. But it's really, it's more about what are your goals? What is this money for? Taking cash and trying to make a quick hit, that's a whole other thing. And, I don't recommend it. Being long-term oriented, this is serious stuff, saving for retirement. That's the way to go. Focus on your goals.
Gotcha. Okay.
And I would also, if you have extra capital right now, my recommendation is kind of work through a system. So make sure if you have any high interest debt, throw it at that, because that's going to give you a return of whatever that interest rate is. So, if you have a credit card balance, you might be losing out on 20% through that. And chances are the stock market's not going to give you that. So making sure that's done, making sure you have cash in the bank, you have an emergency reserve with, 3 to 6 months worth of expenses. So if your income went to zero, you could kind of last through that time. And then again, it's based on your goals beyond that, but kind of make sure those other items are shored up.
Yeah.
And if you're in a situation, for some of us, this hasn't affected too much in terms of work, in terms of income. It's obviously affected just lifestyle. But this could be, to Gregg's point, this is a time where the needs of the world are on full display.
Mm-hmm.
And there's lots of great organizations that are doing phenomenal work in not only meeting people's needs, but also in sharing the gospel. So consider that as well.
Cool. That's that great perspective. All right. One of the other questions that's come in is, how does a stimulus package help or hurt? The $1,000 check sounds great at first, but what will this do long-term for the economy with trillions of dollars in the government debt? Kind of maybe because a little bit of a macroeconomic question around this sounds great. What does this actually end up meaning? I think one of the questions I heard was like, do we have to pay that money back? Do you know what I mean? Like that kind of thing. So what's the macro picture on this from you guys?
Well, I guess I jump in on a couple of things. First of all, I think that the government's asserting that this really isn't stimulus. This is really just covering money that people are losing otherwise. So I don't know to what extent it's going to stimulate anything. The purpose has been for us to just stay afloat during this crisis and be positioned to get out of it. And later in the talk, I would like to bring up, if you're a business owner, a few things I would do. But it also appears fairly obvious that they're going to come up with another package fairly soon.
Yeah, and I would say, anytime you're adding more debt, the government obviously can print as much money as they want, but with that, you're adding kind of a headwind to future growth, I would say. If your interest payments are going up, like if you did this personally and you took more money out of your house, then your mortgage payment goes up. So I think it's necessary in that I think if they hadn't acted, and they did this through 2008, 2009 as well, just to kind of bring liquidity and give the economy some confidence. Long term, hard to know how it'll play out. We're kind of playing with a new level of debt as a nation. We got the $2 trillion that the stimulus package was, but another $4 trillion that the Federal Reserve is kind of throwing in just to, again, bring more liquidity to the market. So to be seen, I would say long term, it's generally a headwind, but I'll turn it over to the CFA because he's much smarter than me.
Oh boy.
By the way, those of you who aren't financial people, this is how the lunchroom is like at any financial planning firms, et cetera. All the inside jokes related to, CFAs, right? This is how it works.
So the good news is the government borrows at a really low rate. So at least we have that. Everyone has their own, macroeconomic framework that, they sort of gravitate to. And the framework that I follow, that I simply find most explanatory, really relies on stable money, fair tax rates, sort of low tax rates on capital formation, so capital gains, corporate tax rates, that sort of thing, and a sort of a reasonable regulatory environment. And so, barring printing of money, which isn't happening at the moment, we can borrow that money. We're not having to print it. Not much has changed, and so there's still, to my view, the favorable backdrop that we saw, prior to all this happening. The layering on the debt is not ideal, but I don't think it's at all fatal or really much of a drag.
Okay, that's helpful. Panel, if y'all have some other questions, panel attendees, if you have some other questions, we'd love to see you just populate down at the Q&A piece. One of the questions that's emerged from two different people for me this past week was, what about refinancing? Interest rates have dropped significantly, the Fed cut. What are your thoughts on that? Doing a refi, is this a good time? Is this not a good time? Again, I'm sure it relates to goals, but what are y'all's thoughts on that end?
It seems like a no-brainer to me that if I have a high interest rate on my mortgage, I ought to take advantage of the low rate. And I think related to that is that we have a historic low federal AFR rate. Now, what's the AFR? That's the applicable federal rate. That's the rate that a parent can loan money to a child, and intra-family loans. And intra-family loans for estate planning purpose are tremendous opportunities for families to lend money long-term at around 2%. Think about this. You loan your kids money at 2%, which they turn over to Jeff and Morgan to invest. Now, I'm not sure I'd recommend leveraged investing, but I'm just saying that these loans are, there are some great ways to move assets around a family using these loans too. So low interest rates are here for, in the insurance industry, we've had a lot of discussion that low interest rates are here for a fairly long time. And one place where it's really affecting us is that it's tremendous pressure on long-term care premiums because a carrier, when they take in your money, has got to invest it for a period of years before they can pay the claim. And so they assume they're going to make some money off of it. Well, they're not. And so premiums are going up in the long-term care area on new coverage, not on existing so much. The other place that's having a big impact is on anybody who has cash value life insurance. Generally speaking, policies 5 years or older are totally underperforming. Doesn't matter if they're getting dividends or interest, the rates are coming down. And everything that people own, they don't realize is not fixed. So they should be reviewing their coverage regularly right now because the rates are so low, it's going to hurt them in the end.
All right.
Follow-up question, Greg, will you adopt me and loan me some money?
Yes, but it's going to be way more than 2% for someone like you, Martin, based on what I know of you. Any other thoughts on the refi piece? What's your general rule of thumb on that? What's the from what to what? Is it a point? What's the typical?
Yeah, if you're gonna be in your home for a while and you're dropping even 3/4 of a point, it's definitely worth analyzing. One, I think, kind of sales gimmick, so to speak, that mortgage companies use is, hey, it's going to lower your payment by X a month. But by doing that, if you bought a house 5 years ago and you were on a 30-year mortgage, you only have 25 years left. So if you refinance to a 30-year mortgage, you're extending the life of your loan by 5 years. So you need to think about that as well as a part of it. But generally, if you're in your home and you're not planning on going anywhere for a while, if it's 3/4 of a point or more, it's definitely worth considering. And then it's just looking at what's the cost of doing it versus the monthly savings you'll get ongoing.
Okay. Helpful. All right. Any other questions from the attendees? What else you got on your mind? I'd love to, you could go ahead and type it on in here.
Hey, Matt, since you're in a waiting mode, I'd like to let me just mention on the $2 billion that's just been released. Anyone in the church who has employees, has a business, really should get on down to their banker as soon as they can. There's about $350 billion that's been made available to small businesses. And if you do the math, what they're offering is that if they're offering from the day you take out the loan, you go in and borrow money. From the day you take out the loan, whatever you're paying in salaries to your employees, in rent, and in utilities, for that 8-week period, so long as you keep employing your employees, you will have that loan forgiven. And so if you have a firm with just maybe 6 people in it, that could be $100,000 forgivable money. So
the purpose behind this is to keep people employed, get the bills paid. That's the purpose behind it.
Yes. So I would hot-foot it too. And you don't have to go to the SBA. You just can go to a regular bank. I've already talked to Bank of America. I'm on a list, and they're waiting for the final guidelines. But those are due by Friday, and they're trying to make sure that they can process these loans and get them out. They may even get out as fast as the $1,200 checks are going to get out.
Wow, that's a pretty big deal. All right, I'm wondering if any of the attendees have any questions related to the stimulus package piece, but anything, I think one of the things I've heard rolling around, or at least I've seen, has been the question of, how's this coming? When is it coming? What's the speculation around when those things might look like? What is y'all's understanding of how it's supposed to play itself out? When, in what ways?
So still working on the details of that, but generally, if you are a married family, each adult will get $1,200 if your income on your most recently filed tax return was less than $150,000. If it's beyond that, there's a scale out period, and then for each child is $500. And then if you're single, if your income was below $75,000, then you should expect to receive a check.
Okay, that's great. And from there, but one of the questions was just on the time, like how is it coming? When is it coming? What's the latest from y'all's vantage? Greg, Jeff, you guys know what's that looking like?
I do not know.
Okay.
I mean, I only know what I hear, and it was to be 2 to 3 weeks automatic because they would just look at the tax filings.
Okay. So is that automatic into bank accounts? Is that the plan? Is that what I heard correctly?
I think it's if your tax return was filed that way.
Okay. So if it was not, then you should expect something in the mail style. Okay. All right. Well, looking over here at some of our potential question pieces. All right, I'm checking on the questions here. Okay. Well, we have some well-educated attendees here. Seem to know some of their stuff, but okay. Oh, you know what? I actually ended up bringing, it looks like I brought Jay Street in accidentally here. Let me just.
Oh, come on. Let's see Jay.
There
he is.
All right. Sorry, Jay. I popped you back off. This is always why when you're on a webinar, you should always make sure that your video is off, because who knows, if you're accidentally picking your nose or something, you might show up in the middle of a webinar. So, all right. Well, listen, I don't want to take any more time than necessary. I want to make sure we answer the questions that were pertinent. So thank you, gentlemen, for kind of speaking into some of these pieces. Any kind of closing thoughts, perspective on any of this? So what are you telling your friends, your family members? How are you, and maybe personally, kind of processing through the like, it's going to be okay? What's some of the peace and hope pieces that are kind of surging through your heart so that you're telling other people? more macro than just financial?
I think for us, it's clinging to the promise that God is our provider and that, all of this is his anyway. So it's my job to steward it. So if it's his will that some of it, the amount goes down, that's okay. It's still all his, and I should approach it the same way of seeking him and how to use it and look for opportunities. I think, especially during this time of where are people in need.
Yeah. Great.
Yeah,
Jeff?
that's great. I mean, resting in Christ's victory. It also, maybe, there are some good things that have come out of this for me, with my family. Jen and I are praying in the mornings now. And we've never been so together as a family before. We don't have all the busyness of the world distracting us. And there's been good aspects to that. There have been some positive things from that. And it really, I find the world so distracting from focusing on Christ, and it's really helped me with that.
Wow, what a gift! That's really cool. Greg, what about you? What's something what you're hanging on to right now?
I think. Well, for one thing, for me, there's a frustration, and I would love ideas on it. But because I think it really is important that we remain in place, that we not expose ourselves, that we not be part of the problem, that we not be take away one of those beds at the hospital. But in light of that, how do we help other people? How do we serve anybody? The idea of getting groceries for someone then opens the door to the risk against the whole idea of remaining in place. So it is a bit of a challenge to figure out what more can we do. But I do know that not stepping into becoming a problem is important as well. That's part of it. And I have enjoyed more time in the Word in this time, and missing Gold's Gym though. But
well, Greg, I'm sure they're missing you too. Well, yeah, one of the I think, Greg, you're articulating one of the great challenges, right? This is an unprecedented time of trying to determine what does it look like to move well in the world in both our time, our proximity, how does love look like? How are we wise financially, and how are we generous? All those pieces are at play. So I think you're wrestling with a very tangible thing. I posted an article on kind of the curated piece on Monday morning on Facebook Connect, and it was actually from Rosario Butterfield about what does hospitality look like in the age of COVID, and it kind of addresses some of those dynamics of how do you hold that tension. So anyway, if you haven't had a chance, you can look it up. It's a Crossway. Anyone who's watching, it's a Crossway publishing article or blog from Rosario Butterfield. Really worth the read and worth listening to. So, or reading through, and just I think it helped me get a kind of a full grip perspective on it. So, all right. Well, looks like we're good. So I want to say thanks to. Hold on. We do, Sarah. Sarah Anderson asked, does the church have any active ways to help those that are in need financially? Yes, we actually have something we're going to be kind of rolling out this week, inviting folks. This little preview component, but kind of a concept we're talking about is the idea is from bailout to benevolence, and trying to look at the reality that through the stimulus package, there's a whole set of folks that are going to be receiving some unexpected funds, and what does it look like for us to take those funds, to bring them before God, and to say, Lord, what might you have me take this to do from a benevolence standpoint, and for us to be preparing a really robust benevolence initiative and opportunity for folks that are part of Roswell Community Church, and then those that are on the outside of that. So that's one of the movements we're going to be doing. So, but as far as that goes, it's going to be all handled through the benevolence kind of team that's going to be handling that short term, and then obviously long term too, as we already do. So that's one of the active ways in which we're going to invite people financially to be able to do that. It's obviously a little trickier to determine how to do that on the micro way, like you were describing, Greg, but But financially, that's one of the ways tangibly that those that are going to be seeing cash that are unexpected to be able to immediately think, what might God have me do to this? How do I listen to him and respond to what he has? So that's the brief answer to your question, Sarah. So, well, gentlemen, thank you on this Tuesday night for taking time to think through this, to be prepared, and as well as just to be able to love people where they're at, answer the specific questions. And I know you get to do this on an ongoing basis in your career. And I just want to say thank you for the way in which you love the world, the way in which your particular gifts and your training helps people live effectively and wisely, and just the fact that you have you smell like Jesus when you do it is a really powerful thing. So thank you. Thanks for being with us tonight. All of you attendees, thanks for coming. If you have further questions, if something didn't get answered, well, hopefully it did, but if you had another question that surfaced later on, feel free to email. You can email me directly at mattmiller@roswellchurch.org. And I'll be glad to fire this off to any of these three gentlemen. And they said they'd be glad to answer any specific questions as best they can offline. So thanks again for being with us tonight, and have a great Tuesday evening, and we'll see you soon. Thanks for joining us on our first webinar. Y'all have a great night. Thanks, gents.
See y'all.
See ya.